Hey, what's up traders? Welcome to this breakdown video where you are going to be talking about Apple. This was a trade that was called out in chat. It was also on the watch list for today. It was a 30% gainer depending on your entry, and for those of you that don't know, anything over 20% on profits is good. That's a good thing, especially when you're trading options, right? Because they can move and fluctuate really fast. So I'm going to break down this trade for you. I'm going to show you the watch list first and let you guys know where my trigger was at. So every morning I post the day trade watch list, and here's the one for today. So it's posted in pre-market, 6:12 a.m. Before the market opens at 6:30. Apple was along over 134.50, and I will always give you some comments as to why that stock is making the watch list. So for us, it had broken the downtrend on the daily, right? Here's your downtrend right here that I was talking about. It confirmed the 50 moving average as a support. That's this green dotted line right here. So it had pulled back to the 50, bounced off of it here, confirmed it as a support. Now trading below resistance at 132.5, and we're looking for a move over. So the resistance price point was right at the peak of this candle here, 132.5. So that candle was resistance, that candle was resistance. You know, it was really like 132, but since this had pushed up to the 0.5 mark, I just said it was resistance at 132.5. So we were looking for the move over that price point. If I move into the 5-minute chart time frame, you see Apple had actually gapped up over this price point in the pre-market session. So I had to adjust that trigger from 132.5 to 134.5. I picked that level because it was a pre-market high. It was a high over the pre-market high. All right, so we'll draw a trend line right there. All right, so our rules state to wait for the first 5-minute candle to close over the trigger level prior to taking your entry. So here is the first 5-minute candle that closed over. Never chase the move. Always try to wait for a pullback. So you want to get an entry as close to the trigger level at 132.5 as possible, and then there's your run up into the high of day, right, and then beyond. So it was perfectly okay to take an entry off of these two price points, anywhere around 132 or 134.5. Sorry, anywhere around 134.5 would have been great. This is not where we decided to take our entry at, though. We took it a little later. So if I'm gonna move to the 1-minute chart time frame and show you guys what I was looking at. This had a big push up, sell off, and then another big push up, and so all of that movement kind of around the trigger level here looked terrible on the 1-minute chart time frame. But during that consolidation phase, so if we're looking at the 5-minute, during this consolidation phase right here, if you're on the 1-minute chart time frame, you can tell what's going on. You get a better idea of what's going on. This pattern is known as an ascending triangle that was shaping up. So it's a flat top level of resistance. That's going to be right at the $135 price point, with a series of higher lows being compressed up to that point. So the idea here is that you get a break over the resistance. Sometimes you get a pullback to test that old resistance as new support. Sometimes you don't. In this case, we did. And this was your perfect entry right here for this move up into the high of day. All right, so if I'm going to the alert room now. So at 7:02, I mentioned Apple. Watch this long idea for a break of 135. You want to have market backing and a bounce on SPY at support. On the watch list, I also give out levels. Here, let me show you. I also give out levels on /ES, right? /ES, levels to watch. I said 3840 is support 1. So let's look at /ES. 3840 was support 1. So the market came down and was just consolidating this whole time right at 38, like respecting 3840 as a support. I mean, we had a couple of times where it dipped below, but the majority of the price action is occurring above the support point. So at this time, we had a pullback to support and then that big run up, right? So from like 707 up to 723. Now let's look at Apple. From 707, 706, 707 to 723. Okay, so that's actually, that's actually right at the dip. But I mean, this run up occurred while /ES was running up also, right? So ES was confirming support and then bouncing and moving forward. And at that time, Apple was breaking out of a pattern and confirming support as it pulled back and then pushing up. So when I talk about in my live streams to watch SPY or watch /ES or to make sure that you do analysis on that daily, trading with market backing, which is SPY moving with whatever position that you're in, can be the difference between the stock that pushes up and pulls back and fakes you out versus the stock that pushes up, pulls back and validates and confirms and then continues to move up. So the market backing can confirm moves for you if you time it right. So that's kind of what I had in my mind as we were taking this position. I was saying, we want to see, that's why I mentioned you want to have market backing and have a bounce on SPY at the support point, all right? And then literally 1 minute later, I said Apple high of day 135 break. That was at 7:03. So there's your 135 break, there's your high of day push. 7:04, another minute later, Apple, your stop loss is at 135. Enter on a dip if you're not already in, right? So here's your dip, pullback, there's your entry for the move up. Anywhere in this area would have been decent for an entry. You could have waited for this doji to form, you could have waited for this next candle to print green, could have even waited for the next push up, although at this point, you kind of want to be in before this happens. Entering as close to the support as possible allows you to get allows you to set your stop loss tight, so you have a very small stop, right? A very tight stop with the potential for a high reward. All right, and then I actually gave the contracts in the chat. I didn't put them in the alert room, but I gave them in the chat. Apple, and then 7:08, I said Apple, that's high of day and 15% from the 135 dip entry mentioned at 7:03. And then here is when I listed the contracts. Again, I had already listed them in chat. I just didn't put them in the alert signal. So they were at 121. The contracts that I listed here were at 121 when I mentioned them. They're now at 140. I said you can take profits or hold, up to you. Anything over 10% is good. Anything over 15% is good. The ideal play is 20%. That's kind of what we're aiming for. I will usually scale out at 20%, right? But I said, if you hold, move your stop to break even for a risk-free trade. If you're up ever 15% on a trade, there is absolutely no reason why you should take a loss on that trade. Unless it just dumps on you, right? If you see it coming back down, get out at break even. If you didn't take profits while you're up, you need to get out at break even before it comes down on you, because you never want to watch a winning trade turn into a losing one. Taking no profits on a trade and just paying commissions is better than taking a loser or watching a winner turn into a loser. Then at 7:10, Apple, that's 20%. So if we're just watching this on the way up, this move right here at 7:08, that's when I said we were already up 15% right here. That's why I said you want to enter down here, because you want to capitalize on this move, right? And a couple minutes later at 7:10, I said Apple, that's 20%. Scale some off into the strength, right? Take some off. This still has potential to run, but you want to take some off into that strength. 7:11, literally 1 minute later, that's 30%. So I think that was the end of our trade here on this move. So we missed the top tick by 2 candles, but that's fine, right? You want to get out of this position before this happens, because when that move happens, you can see a 30 or 40% gainer come back down to 15 or 20%, and that's the last thing that you want. So scaling off into this strength, and then you see it's just followed by a lot of chop. So you want to get out of the trade in this area so that you don't have to hold through all of this. I mean, by the time it got back up here and pushed a new high of day, if you're trading these contracts, the weeklies that expire tomorrow, Theta's eating that premium. So get in and out while you can, right? Take advantage of the pop move while your premium is spiked. Don't sit through the chop. Look for a later entry if you want to trade this again. You could wait for a break of the downtrend here, or maybe when you saw this volume push into the high of day somewhere in this area for a second entry, or maybe after it had pulled back and kind of tested this 135 area as a support, or right at VWAP as a support for the move up. There were plenty of other entries intraday that you could have taken rather than trying to hold through this little bit of chop there. All right, so that's the play breakdown on the ascending triangle formation on Apple straight off the watch list. I am super proud of everybody that took that trade. So I saw some people had wound up taking like 40% off of it. I think the contracts by the end of the day had pushed up like 70%. So if you're holding through that, well done. You've got more cojones than I do. But yeah, that's it. That's all that I have for this breakdown. So if you've enjoyed the video, please hit the like button. Subscribe to the channel if you haven't done so already. I make videos like this all the time. Thank you for your time, and I'll see you all in chat. Have a good one.